Welcome back to the channel, guys. My name is Nick Armenis. In today's video, I'm going to cover off my favorite ASX renewable energy stocks to watch in 2021. Guys, please read this disclaimer. I am not a financial professional. If you want financial advice, go seek a professional, okay? This is just my opinion on this stuff, so please do not comment saying this, that, or the other, okay? Let's get into the video. So firstly, let's cover off why would you invest in renewable energy stocks? And guys, always remember the timestamp is below. So if you ever want to skip past bits like this, I do have the stocks I cover off in the timestamps below. So my investment thesis for investing in renewables and companies related to renewables is pretty simple. There's a clear shift in the economy, no matter where you look. So government, business, and the consumer level. And we're moving away from high carbon fuels such as coal, oil, things like that, to cleaner, more renewable sources of energy like solar, wind, hydro, and things like that. Now, regardless of if you believe in climate change, don't, this is occurring. So all of those opinions you have should actually just be set aside regardless if you're wanting to make money. So at the moment, 25% of the world's energy comes from renewables, and that's increasing by 30% to 30% by 2024. Now, more than 425 cities, 1,100 businesses, and 549 universities have committed to net zero carbon, okay? That is a lot of cities and a lot of businesses. Growth in sustainability and socially responsible investing has grown a lot, which means that money pours into these companies, which means the share prices go up. Joe Biden taking office, he's been sworn in now. It's going to mean a massive increase in spend from the USA, and that sentiment should flow through to ASX listed stocks. I will do a video on US based stocks that you can buy from Australia through things like Stake. And if you are interested in learning more about US stocks, it's something I do invest in. So I will put more content out on the topic. Huge earnings growth is occurring in a lot of these companies, guys. So just based on that, earnings growth results in higher share prices. So there's a few key areas, and I'm going to mainly focus on energy generation and software to an extent in this video with a little bit of resources. So you can invest in energy generation, so solar, wind, hydro companies. So people actually creating the energy. You can invest in battery, in batteries obviously mainly to do with electric vehicles, which is an area you can invest in. Resources, so lithium, nickel, graphite, there's tons of them that are benefiting from this because obviously a lot of these new renewables need different minerals and resources to produce the products that are needed. And lastly, software and technology, another really good area to invest in this area. The first stock I'm going to cover off, guys, is New Energy Solar Limited, ASX ticker NEW. So what do? It's pretty simple, guys. The structure is a bit more complicated. It's an investment entity focused on investing in utility scale solar power plants that generate emissions-free power. Okay, so a solar company, but basically a holding company that invests. It doesn't actually run these assets. It buys them, has people there running them, and it collects the profits. The company has acquired a portfolio of 16 solar power plants. So don't worry too much about the company structure yet. I'll get into it a bit more in detail soon. So it's currently trading at 93 cents. It hasn't had a good run in the last few years. A lot of it has to do with this structure, okay? The market cap is currently sitting at 330 million, so it is on the smaller end of the scale. It does pay a decent dividend, guys, so a lot of people do buy it precisely for the dividend. So my investment thesis on this, guys, is pretty simple. The current corporate structure isn't well supported by investors, particularly institutions in Australia. So what they're doing is they're selling off a lot of their assets in Australia, potentially all of them, and putting a greater focus on the USA. They do already own some USA-based power plants. Now, in the US, this structure that this business operates in is far better well known. It's promoted more by institutions and investors and retail investors as well. So basically, the share price here has lagged because no one really understands this business well here, and they don't really like the fact that it's held in that type of structure. It's not understood, so a lot of the big money just doesn't flow into it. They've got really good assets, but because they're mature, they're not in a growth phase and not understood, they're going to focus in the areas where they're seeing growth and where shareholder value can be extracted. So the proceeds of the sales of these power plants will go into buybacks, returns of capital, and debt repayment. And obviously also to increase the focus in the US. The reason I like it, guys, is if they do that, it's going to unlock a lot of shareholder value and potentially you're going to get some really good dividends paid out to you. The Biden administration is committed to trillions in renewables, so this could be a great move for this company, harnessing this tailwind. US assets can continue to be improved. The management team has said this and expanded to improve their earnings. So they should be able to get more earnings in the US by improving those assets and also increasing the number of panels there. Currently, the price is not following the value of this assets, guys, and that's why they've conducted this review into this, which has basically said, yeah, great assets, price should be higher, it's valued much higher, go to the US. Okay, so very simple. Obviously, there's a bit of risk with the US business not doing well. Maybe they've missed some of the growth. Maybe they're going to overpay if they buy new assets. But just them improving the assets there, getting the money from the assets here, which are in high demand as well. So they're going to be getting top dollar for selling the ones here. So it doesn't worry me too much because they're going to be getting good money for the things they're selling here, even if they buy something expensive in the US. I mean, the growth runway for solar, guys, is going to be huge. So I'm not too worried at this stage. This should also be a pretty good income generating business over time. So that was that stock, guys. The next stock I want to talk about is Clearvue Technologies, ASX ticker CPV. So what do? They've developed advanced glass technology that aims to preserve glass transparency to maintain building aesthetics whilst generating electricity. So basically, they're putting solar panel technology into glass and building surfaces. So it basically creates a pane of glass into what's called a luminescent solar concentrator, which basically, guys, is going to turn a whole building into a whole series of solar panels, right? They're also working on tons of different things like blinds, shutters, awnings, doors, facades, walls, skylights, all sorts of things where they're embedding this technology into. So huge potential. Imagine a whole building, how much electricity that could generate. It's currently trading at 29.5 cents and it's only got a market cap of $43 million, guys. So it's very early on. There is definitely risk with this one, but it could be one of those stocks that, delivers you 10x plus returns if they're able to execute really well. Obviously, it's not yet turning a profit and they're investing into growing the business, but let's get into the investment thesis. So very exciting company, guys. This is something that I am definitely going to be investing in. Obviously, this is not advice, but I really like this company. So it's going to benefit from the huge shift, particularly occurring in the US and EU. They're appointing lots of distributors all over the world, as I say further down, particularly in those locations. So think about how many buildings are in the US and EU. If this gets installed on older buildings and retrofitted, or even just the new buildings, obviously it's going to cost quite a bit of money to retrofit, but eventually I think governments will mandate things like that occurring. You've got a great leadership and technical team, guys. So Victor Rosenberg, the chairman, has over 25 years in the glass industry, specifically in, high rises and all sorts of things of that nature. So perfectly equipped to drive this business forward. There's also plenty of experienced physicists and engineers working for this business. So some really impressive people who've invented a lot of stuff. I recommend you go and check their latest update and go to the section on who works in the business and key personnel. Some really exciting people there. If you're interested in this business, guys, I'm happy to do a deeper dive, talk more about it. Many cities in their push to net zero emissions are focusing on the building emissions, guys. So a lot of businesses, particularly in Canada, are focusing on on building emissions. So the great thing about this technology is it reduces energy costs by obviously reducing your heating or cooling bill, prevents unwanted UV light from entering the building, which would heat it up, and it converts the unwanted radiation into electricity. The global market of this type of product is currently valued at $2.4 billion. So the $40-odd million market cap is very small, guys, and it's growing to $4.3 billion. So we are adding a lot of buildings to this planet, guys. It's actually the equivalent of New York City every 34 days. That's a huge amount of space where eventually, obviously companies are probably going to do it and start off doing it on their own due to regulations, but governments are going to almost mandate that this sort of technology is embedded into large buildings. Particularly that because it's going to block out a lot of sun in other areas. So they may as well harness it especially if they're going to build up high and block views. On top of this, as I said, they're signing lots of good agreements and appointing distributors. So it's just a matter of time that we need to see some earnings trickle in through this business. And if they keep getting good agreements like they have been, this should grow into a monster, guys. The next company, guys, is Tilt Renewables, TLT. It's an Australasian owner, operator, and developer of a number of established wind farms and extensive wind and solar development pipelines. So wind and solar, mainly wind, and Australia and New Zealand. So it's actually listed in New Zealand as well. Currently trading at $5.50. It has had a pretty strong recent run up recently, but its market cap is $2.1 billion, so it's a bit larger than the ones we've currently been talking about. And on top of that, it's got a pretty undemanding PE ratio there. I don't know how accurate that is according to, this is just from Yahoo Finance. I'd have to double check what its actual PE is based on the most recent earnings, but definitely a bit of a bigger business here. So unlike a lot of the stocks in this space, this actually has money coming in, guys, and pays a dividend. Revenue's growing really fast at 46%. Revenue is growing very fast at 46% for the last half in their update, and net profit, doubled to 26.8 million or 125%. It's got a history of doing share buybacks, 258 million recently completed, and it's got a strong development pipeline of over 3,000 megawatts of power coming on hand. It's also got lots of cash on hand to invest in further opportunities. It's got a good management team running it, and Infratrill, another large business, is a major, the largest investor. One thing to note here is these guys do invest in renewables, the large investor, but they've implemented a strategic review of this business. So if they pull out, which is a risk, expect the share price to drop, okay? But on the flip side, if they decide to invest more, then expect it to appreciate. So that's probably one to just watch and wait in this instance. And potentially, since I've released this, something may have come out updating us on this. The next one, guys, is not exactly renewable energy, but it is in the space. It is a resource stock called Vulcan Energy. You would have seen it. It's been all over the news. It has had huge growth. So what do? Vulcan is aiming to become the world's first zero carbon lithium producer. Its major project is smack bang in the middle of Northern Europe in Germany. Northern Europe is the fastest growing EV market. So as you can see here, there are tons and tons and tons and tons of factories and all sorts of businesses set up in this region. So Vulcan will be able to supply them with its zero carbon lithium, okay? Now, the major project hasn't gone ahead yet, guys. So this massive run up is all currently speculation. Obviously, it's got a huge value, but at a $685 million market cap, the PE is out of this world. It hasn't really got earnings yet, obviously, because it's a totally new project. There's a lot of hype around this, so wait for the dust to settle before you get in, if you decide to, okay? I would say that expect this to be a yo-yo in terms of performance. So long term, though, the project is valued quite high, so potentially this $685 million market cap is not an issue. So we're yet to see, but based on financial analysis of here and now and even projected, this has got to live up to some pretty big things and kick a lot of hurdles out of the way before it's proven itself. But my investment thesis on this as a watch and wait would be demand for lithium is exploding due to the EV market. The price of lithium and resources in general is recovering. So that's without a doubt. So that obviously values the projects differently to if lithium was lower. It's got a very good narrative, and that's the main thing here, guys. It's the story, it's the Tesla personnel that may be consulting there, it's the zero carbon lithium idea, which hasn't yet proven itself, right? The fact the project will use geothermal energy to power itself too, I think is very exciting for people. So there's a lot of excitement around this. It's got a good narrative. So this could run very, very hard and no one knows, okay? It's a bit like Tesla. It's got a good story, so it may do very well. It's in a very good location, Germany, close to many of the manufacturing plants of batteries, cars, etc. The recent pre-feasibility study, the FPS, is what sent this skyrocketing. It showed very strong potential for the project to go ahead, and it valued it at 2.25 billion euros or 3.5 billion Aussie dollars. Obviously, the $680 million market cap might be very, very okay if this is the case, and over time they develop more projects and it grows and grows. So although it looks expensive now, if that eventuates and the pre-feasibility study is correct and they get all the approval, there's a lot of ifs there, then potentially it's still undervalued. Now, there's some other notable mentions in companies that I haven't covered off here, guys. I hope you've enjoyed these ones, but here are some other ones. You've got some really good New Zealand energy companies like Meridian Energy and Mercury, and Infitril, the one I mentioned that's invested in Tilt. So all of these companies, MEZ, MCY, IFT, all very good, a bit larger than the ones I've covered off. GenX Power, GNX, is another company that's worth looking at. Carnegie Clean Energy, CCE, and Integrated Green Energy, IGE. And if these are ones you want me to cover off, just leave a comment below. Now guys, I hope you've enjoyed this video. I have been enjoying all the feedback I've been getting. I'm enjoying doing these videos. I hope you have, and I will see you in the next one. All the best.